Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Today's episode of the podcast is going to be a little bit different. I'm going to throw it over shortly to Dave, who is the author of the book Night Trader. And you can find him on Twitter at @dgretta_author. You can see it there on the screen. And Dave is going to go over 7 points that he has. And I'm just going to throw it over to Dave now to give himself his introduction.
Hi, Dave. Well, I know I won't be forgetting your name anytime soon. A lot of D's, 2 Daves. We have dividends, and we have the month of December. So a lot of D's here. Thanks for having me. I'm going to get started. I'm going to talk for the first maybe seven or 8 minutes about myself and my background, and also how my book came about, and then I'm going to go into my presentation after that. So I'll get started. I figured I'd start with since we're on YouTube, I might as well talk about a connection I have to YouTube. I actually was in the same finance class in college as one of the 4 founders of YouTube. So he did graduate about 8 years after me, but we had the same finance class, same teacher. We attended the same college in Pennsylvania, a really small school called Albright College. You wouldn't think one of the founders of YouTube would come from, a little school in the middle of Pennsylvania. So we both attended the same college. We're in the same finance class in college. As a matter of fact, I met him last year at a reunion. Our teacher of the finance class had a reunion, and I met this gentleman that was, one of the founders of YouTube. Him and his brother, actually. His brother was the main person, but the guy I went to college with in the same class, he ended up being the CFO of YouTube. So, actually, a fun thing about YouTube is just to finish on this first is that the 4 founders of YouTube, they actually all worked at PayPal. And as you'll know, some famous people worked at PayPal. Elon Musk, and if you Google it, there's actually this thing called the PayPal Mafia, which is I think 12 or 13 billionaires that came out of PayPal, including the 4 founders of YouTube, the one that I know that I went to school with, and many others. Yeah, it's called the PayPal Mafia. So I guess if you want to be a billionaire in life, you get a job at PayPal, I guess. Seems like that's where a lot of them started. So that's my YouTube connection. I'm actually trying to get him on a Twitter space with me, but like I said, he's pretty much a billionaire, so I don't know if he wants to spend his time on Twitter spaces with me, but I'm trying. So
yeah, you never know.
I also asked him, I texted him earlier this year if he has any other ideas in the future, to include me, maybe the next YouTube I can get in on or something. So, next I'm going to talk about Wall Street. And it's all over the back of my book, in my book. Wall Street's been a huge part of my life. I've spent a lot of my life on or around Wall Street. And the way my Wall Street kind of career started, or my introduction to Wall Street, was in high school. When I was 16 years old, and I've always had a fascination, even before age 16, of just the myth of Wall Street and the money, and just I knew that's what my passion was, even as a young child. So at age 16, I bought 10 shares of a company. I don't remember the name of the company. I was trying to remember it. They were a chemical company headquartered in Wayne, New Jersey. So I bought 10 shares of it. So 5 or 6 months after that, I got a letter in the mail. And the letter, I opened it up, and the letter said, "You've been invited to the shareholders meeting of this company that I own stock." And I saw the address. It was, a certain day. I think it was on a Wednesday, and it was on, I think, 40 Wall Street. And I basically had goosebumps and was shaking because, I had always wanted to go to Wall Street. I was only 16 years old at the time, and they're inviting me to a meeting in a building right on Wall Street. So I had never been happier in my life. So at age 16, I did what any kid would do. I skip school because I had to, because the shareholders meeting was on a Wednesday. So, and luckily where I live, my high school was about an hour and 20-minute bus ride to Wall Street, door to door. And there was a bus station about 5-minute drive from my high school. So I did like a Ferris Bueller's Day Off, if you watch the movie where he skipped school. I went by myself. I brought a camera. I actually have all this I have pictures of all this from age 16. I took pictures. So I show up at Wall Street. I actually had a shirt like this on. I put a tie on. I had a pair of khakis. And when I was 16, I probably looked like I was 12 because I was very skinny and I had glasses. So I walked into the lobby of the building, I just remember the security guys saying to me, "Who the hell are you?" basically. And I said, "I'm Dave Gretta. I'm here for and I took out my letter. "I'm here for the shareholders meeting." So he said, "Oh, okay, go right up. It's on the 10th floor." So I went to the shareholders meeting and it was fine. I don't remember what we voted on, but I was just so happy. And so I went out. I took the tour of Wall Street by myself. Brought my camera. I went over to the stock exchange, and then I went to the Wall Street Bull. The bull is also a part of my book that I have a picture of in the beginning. The famous Wall Street Bull. So I have a picture of me in front of that at age 16. So so that was that. Then fast forwarding, after college, after a couple of years of living at home, I finally I did get a job in commodities right near Wall Street at 17 Battery Place, which is the tip of Wall Street. If you stand at that building, you can see the Statue of Liberty. It's right almost a stone's throw from the water, a few blocks from Wall Street. And then I worked a few blocks from there for 3 or 4 years, literally across from Wall Street at One Liberty Plaza at a $1 billion insurance company called Scandia. And that's where my career started really kicking in. And that building, a lot of people say they worked on Wall Street or they work on Wall Street. And what does that really mean? I mean, do you mean that the address of Wall Street? There's only a few buildings. Wall Street's not that big. And most people say they worked on Wall Street, but they might work at, in Canada at, RBC Bank or a multi-billion-dollar company. So I talk about my book, and I technically wasn't on Wall Street, but I was across the street from Wall Street. And that's what I talk about in my book, literally. So my building in my office, I could see out. And then finally, to wrap up my Wall Street time, I got my master's in finance a few blocks from Wall Street at Pace University. I went there for about 4 years. So I spent many late nights, going to work, going to grad school to get my master's in finance, and then, walking past Wall Street at, 10 o'clock at night after my class got out to get in the train. So to make things really interesting, my life went full circle because with my youngest son last year, and there's pictures on my book website of this, I decided to my son and I took a limousine to Wall Street for my book debut last August. And I put pictures of this on my website. That just had a lot of meaning for me. My life kind of ended up, age 16 on Wall Street. And then last year in my book debut with my son on Wall Street. So I thought it was pretty cool. And speaking of, we took a limousine, we went in style, but actually where we live out here, I even know to save money with a limousine because if you put in bridge tolls and parking, parking is like $60, $70 for the day in New York. So the limousine was probably about the same price. So I even save money when I take a limo, I guess. And then finally, before I go and I'm talking about my book, is I have a goal in life. So I did all that on Wall Street, what I told you, but ultimately my ultimate goal has always been I want to get on the floor of the New York Stock Exchange. I haven't gotten there yet. I've gotten close. I've been in the stock exchange, but not on the floor. So I'm hoping somebody, maybe Jim Cramer's watching this. He can invite me. But I do. There is a chance that, matter of fact, as early as next week, I'm actually going. I did a tweet. I just found out yesterday, so maybe the gods are with me. This guy, Meet Kevin, who has like 3 million YouTube subscribers. Everybody does Meet Kevin. He basically told me to meet him at 5 o'clock next Friday, December 9th, outside at the stock exchange. Not just me, but he's doing a meetup for.
Oh, cool.
Yeah, so I am going to bring him my book. I tweeted him. He hasn't tweeted me back, but I'm literally going to be there. And I'm thinking I might have a good chance of getting in the stock exchange because at 5 p.m. next Friday, I don't think a lot of people are going to be around, quite honestly. I might be one of the few people there to meet him. So Unless you're going to go. I mean, where do you live? You going to fly down and meet us on Wall Street, or?
Yeah. I've actually on Google Maps, I have looked. I think it's less than or about a 10-hour drive from my place to New York City.
Well, why don't you meet us there 5 o'clock next Friday? You, me, and Kevin, and you, and we can you can meet me in person.
I'm going to pull a Ferris Bueller and skip work.
Yeah, exactly. Pull a Ferris Bueller. So next, I'm going to talk about my book, and then I'll go into my 30-minute presentation. This is my book, Night Trading. Everybody, yeah, very good.
Yeah, there's the Amazon link, and you can easily find it. Just search Dave Gretta Night Trading on Amazon, and you can pick it up there for, looks like a pretty good deal, just $17, $18.
Exactly. So that's me and my book. And so I started writing this book almost exactly 2 years ago to this day. And basically, to sum up what I know about investing and promoting financial literacy. I mean, I go out, I don't get charged. People don't pay me money. I go out to high schools. I go to my kids' high schools. I go to I've been at several high schools and colleges speaking about financial literacy. And there's two things about my book I'm going to talk about, like why, a lot of times there's a lot of people wrote books, by the way. A lot of books were come out of COVID. I mean, that's the reason that pushed me to writing a book, because as well as I'm sure there are many thousands of other books written during COVID, because, what are you going to do during COVID? Everybody was stuck home. But let's kind of examine what makes people, there's a lot of people out there, I think, I don't know if you or somebody that has notes scribbled somewhere in a notebook, and they always go through life saying, well, I want to write a book, and they just keep a notebook. And what takes somebody from a notebook into your, under your bed or your nightstand to actually publishing like I did? Well, for me, it was two things. One was the name Night Trading. As you probably agree, it's a pretty cool name. Everybody says that. So if it wasn't for the name Night Trading, that's one thing. I probably wouldn't have published or written the book. I got the name because I do everything at night. So, towards the middle of writing my book and towards the end, I figured, well, I need a name for the book. And I'm sitting at like midnight, laying in bed, just thinking of a name. And I said, this word day trading, everybody talks about, but then I just talk about it's midnight. I look around and I'm like, wait, maybe I'll just call it Night Trading. So I started Googling, I'm sure somebody wrote a book called Night Trading. Nobody ever did. Nobody really used that term. So that's how the name came about. And also from the word day trading. I mean, let's think about this. If you went up to like a 15-year-old, or you went up to an 80-year-old or a 60-year-old, or any age from age 15 up, and you say the word day trading, I guarantee you over 80% of people, even if they didn't invest in stocks or know anything about stocks, they know the word day trading. So it has a very good recognition for that name. So that's how I got the name. I'm working with an attorney, a patent attorney. I might even be trademarking the name Night Trading, to use for other things. So maybe every time you say Night Trading, you get to pay me, 3 cents or something. So I'm looking to do some branding with that. Literally, I am looking to trademark the 2 words Night Trading. The other thing is chapter 4 of my book. Again, I wouldn't have written the book if it wasn't. This is the main reason I wrote the book. It's called Just Buy Your Bank, and there's many people on Twitter that read my book. They love this chapter. That alone, if you just bought my book and you ripped out every other chapter except chapter 4, Just Buy Your Bank, my book's totally worth it just for that. It's that good. I always said to myself, it's really hard to say what's the best investment book ever, and I wouldn't recommend. I tweet this all the time. You can't just read one investment book your whole life, or even maybe 2. You need to maybe read. I've read about 15, and maybe there's 10 good ones. But I don't want to win the argument. You can't say what's the best investment book ever. But my argument for myself is that I don't have to write the best investment book ever. Albeit I think it's one of the better ones. I wrote the best chapter of an investing book, and that's how I describe it. So I feel that chapter 4 of my book is that good that it might be the best in investment book history. I don't know. I feel it is. So,
and it's great advice. Buy your bank. I'm sure you're well aware of how strong the Canadian banks are. I talk about the Canadian banks all the time on this podcast. And yeah, buy your bank is solid.
Yeah, sure. I'm not going to maybe trademark that too, because you could say just buy your insurance company. I had somebody else offend to say, why you just buy your insurance company and just buy your bank. So the books, I don't want to give too much away about that chapter, but it shows how I made I really just simplified things. I made the most money I made in my life of any investment, and the easiest. I simply just bought a bank. I can almost see it from my window here, down the street from my house. I basically tripled my money. The bank got bought out, and I still, even to this day, own a decent amount of shares, even in the new bank that got bought out. I just keep making money off this. The dividends, it's quite fascinating. So I talk about that in my book. My book, by the way, is also only 100 pages. That's the other thing that differentiates my book. So, I'm as you can tell, I'm the kind of person I like to summarize things. I don't like to, talk too long. So 100 pages. One thing I want to note about myself is I don't charge for my services. I don't do a paid Substack. I don't do stock clubs that you see all over. I just put all my eggs into one basket. Everything's in my book. So, and I think books provide stock investing in books are the great value. They provide so much value. I mean, think about this. My book's $18. You can buy Warren Buffett's book for $25. Mark Minervini's books are $25. I can go on and on. Peter Lynch, you can buy his books for $18, same as mine. So there's so much value. I mean, I think people just underestimate how valuable just an investing book is, especially a book that can save you or make you money. Real quick, one last thing I want to do a plug before I get into my 30-minute my presentation is I actually am starting I just tweeted out, and I've gotten a lot of traction on it. Starting January 1st, I'm having my own Twitter space that I'm hosting, and it's going to be called Fundamental Analysis. I came up with this really cool name. I actually have a graphic designer working as we're speaking, designing like a cool logo for it. So it's fun-da-mental analysis. So it combines fun with the mental part of investing and then the analysis part. So I've already got guests booked until February, and I've got some pretty high-profile people.
Awesome.
I'm going to continue to get more. I'm going to do it on Sunday nights, maybe once or twice a month starting in January. I've got just a huge interest of people that want to be on it. So that's the fundamental analysis space. So now, everybody, I guess take a deep breath. I'm going to go into my.
Let's just hold your book up one more time.
Yeah, no problem.
Perfect. So Night Trader, you can definitely find that, like I said, on that Amazon link. And there is a website for the book as well, I believe. So it's very easy to find.
Yeah.
And let's just get right into your 7 points that you want to discuss.
That's the fun part. You can just sit back and relax. I'm going to do all the talking, I guess, or most of it. So I sat down before Dave asked me a couple weeks ago, and I said, I just want to talk about I want to do a summary of all the things I've learned in my life from age 16 on Wall Street till now, writing a book. What are the most important things I can tell Dave and his listeners that's important in investing, and summarize it in an easy to understand way. So I have to warn you, I'm going to use simple words like boats and cars and, in my presentation. So, which is good. So let's start right away. Number one. And I thought this first one, I'm going to dig right into it because you are the dividend guy. And this is appropriate for the passive income podcast. Let's talk about dividends. You can only make money on a stock when you sell it, except dividend stocks. I'm going to say that again, actually. It's so good. You can only make money on a stock when you sell it, except dividend stocks. So I have 70% of my personal portfolio in dividend growth stocks and also REITs. I have a few REITs, mostly apartments and warehouse REITs. But, picking a stock is only half the battle. I mean, there's kind of like three things when in stock investing. You have to pick the stock, which is very difficult and complex in and of itself. Is picking a stock that you want to invest in. When are you going to buy? And then when are you going to sell? So those three critical things are very difficult. Dividend stocks, however, give you a little bit of leeway and a little bit, quote unquote, safer. So you don't have to kind of, beat your brains in to figure out those three things that I said: picking the stock, when to buy, when to sell. Because think about dividend stocks, when to sell, you might never sell, or maybe until you're 80 years old. So. And there is some conflicting opinions when you talk about buying and selling stocks, because a lot of people say, you hear this all the time on FinTwit, don't fall in love with the stock. People write books about this. Like, don't fall in love with the stock. But that's kind of counter to what with dividend stocks, because you want to fall in love. I mean, So it doesn't make any sense. So like a lot of stocks I have, I say I do fall in love with them, because if I didn't, then I'd be selling like my, really good dividend stocks, like Starbucks or something. So that's that. And do you have any comments on that, Dave, or thoughts? Or
Yeah, well, obviously, I love dividends. It's right there in my name. It's in my name on Twitter. And yeah, saying, you sleep at night not worrying, because you don't, if the price goes up or down or trade sideways, you're still getting that passive income monthly or quarterly. And yeah, so I I love REITs. I love dividends. So that's my only comment to that, I guess.
I knew you'd like it. I knew you like dividends. So the next one I'm going to talk about boats, 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 something simple. I got this this blurb from this guy Blue Suit Dylan. He's very popular on FinTwit, but he came up with this. He said, if you go up to somebody and say, okay, you have to go across the Atlantic Ocean, and you have to do it in a boat. So what are you going to do? You're going to go build the strongest boat you can. If you have to go over the Atlantic Ocean in a boat by yourself or with a couple people, you're going to do research on the materials of the boat and build a strong boat. But what about the weather? So if you have a strong boat, but what about the weather? I'm going to bring up an example like the Titanic, and we all know what happened with that. So the point here is, the analogy is, the boat is the stock and the weather is the economy. So the point is, like I said, you don't want to end up like the Titanic. You don't want to build a strong boat and then there's like a hurricane coming ahead. So you have to look at the stock and the economy. So that's pretty much common sense there. I spend maybe about less than 5% of my time, but it is a percentage on the macro analysis. But I think most of it is kind of futile effort, because no one can predict the future, even past the next 5, 6, 7, 8 months, let alone a year or two out. So I do macro analysis as part of my analysis, but so that's all I have on that section, Dave. Any comments? Or?
Yeah, I think that's a great analogy. The boat and the Titanic, the iceberg, the economy. And yeah, you can have the strongest boat, the strongest stock, but if that company headlongs into an iceberg, well, then there's a problem, right? So great analogy.
Thank you. Thank Dylan. He gave me that from Blue Suit Dylan. He's coming on one of my spaces too, so he's really good. Number 3 of the 7 summarized points of investing. How many stocks should you own? And this is always creates a lot of. I just got into a discussion in the last 12 hours with somebody on FinTwit about this. How many stocks should you own? And I'm going to go what Peter Lynch says. Having each stock is like a child that you have to babysit. So think about that. If you have 20 stocks, you have 20 children you have to babysit. And every one expensive college bill also. So let's talk about this for a second. So yeah, every stock is like a child you have to babysit. And Mark Minervini, also one of the greatest investors, I've read both of his books. He talks about this. He calls it, instead of diversifying your portfolio, he calls it de-worsifying. D-I-W-O, de-worsify. So, and this isn't me saying this. These are some of the greatest investors of all time. They both kind of concur. Peter Lynch, Minervini, a lot of the greats. 12 to 15 stocks is ideal. And I'm nowhere near that. I'm above that. And this is my biggest problem in investing. Like literally, if I had to pick something, I would say owning too many stocks is my personal problem. And I've been doing this for a long time. I wrote a book on it. So the more you own, the more stocks you own, you greatly, past 15, you greatly decrease your chances of beating the S&P. So if you start owning 18, 20, 25, 30, I actually met a guy at an investor conference 2 years ago. He told me he had 98 stocks in his portfolio. Now I haven't heard from him since, but I'm sure he got slaughtered in this bear market. So it's extremely dangerous to own more than probably 15 stocks. But again, with getting back to Dave here, getting back to dividends, you have a more leeway here and more room to argue this point, because with dividend stocks, that's the thing. So I have about 22 stocks in my portfolio, but 15 of those are dividend stocks. I have a large percentage of dividends, as well as probably Dave. So this kind of theory does not apply always to if you own a large share of dividend stocks. However, dividend stocks are risky as well. So I'm trying to cut down to like 15 to 18 stocks in 2023. But I could sit here all day. I mean, people press me on this. Like, I could argue, and I have valid points. So if anyone wants to challenge me on this, I could just, to argue that owning a lot of stocks, you can beat the market is futile, because I could just bring up Kathy Wood, and I don't like to call people out, but you can bring up her. You can, she has 35, 40 stocks. But I have other portfolios besides Kathy Wood. I'm not going to mention names here, but I have them on right here on my spreadsheet of high net, like people that, manage mutual funds, ETFs that are here on FinTwit. They're on MSNBC. They're on Bloomberg. I'm not going to tell you their names, but you can go. I have them on my computer here, all their portfolios. Most of them have about 35 to 40. One guy actually, no, he owns, I met a guy that owns his own ETF and about 35 stocks. I met him last year at a conference, and they're all getting destroyed flat out. And a lot of them might not even recover back to break even. So that's that. Do you have any other points on that, on how many stocks you should own?
That's so first 98, that's a lot. That's 98 kids to babysit. Holy. I'm probably in around the same position of you, in that low 20s, and yeah, same as you, the majority are dividend paying stocks, at probably 75-80% of them, maybe even more, maybe close, maybe 85%. I'd actually have to do a breakdown to know the exact number. And there are a few that I'm looking to add in 2023. Going back to sort of the buy your bank, I have some exposure through an ETF, but I am looking to sort of start to add some of the Canadian banks individually, and then a couple other ones where I've gotten onto this sort of idea, exactly like the buy your bank, but also buy your phone company, buy your power company, buy your just buy your grocery store, buy things like that, right? Like, just buy the things that you use. So I might scale back on, like, sell off some of the other positions that I have, and just to keep it at that more manageable level of, I think 20 to 25 is a manageable level, but that's just me.
Yeah, that's fine. Number 4 out of the 7 things of investing. This is one that I'll probably take the most time, but it's also the most fun. It's about focus, not getting distracted. To me, this is I tweet about this all the time. This to me is the most important thing in anything I do. Investing, driving a car, cooking. Try to cook. If you're not focused, you're going to burn your. Playing sports, another one I'm big on, as you know me, if you read my book, and my kids play sports big time in college. So professional athletes do this. There's books written on this. Tom Brady talks about focusing. So same thing as is sports, as in driving a car, as in cooking. Let's talk about focusing and investing. And that's where I have some expertise. In my opinion, there's too much overload on FinTwit and also Financial YouTube. My advice that I apply to myself is, and you can take this for what it's worth as my opinion, but for me, I don't listen to 95% of what's on FinTwit and Financial YouTube. I mean, perfectly, and I've tweeted this before. I think 95% of it is, I'm going to use some, and there were some bad words I can think of, a cesspool, basically. However, I think 5%, and most people agree, 5% of what's on FinTwit and Financial YouTube is tremendously great. Even better than friends I know that work on Wall Street. Like, it's way better. Like, and most people would agree with me. Like, if you can zero in on a small percentage, maybe 5% of what's on FinTwit, and I include Financial YouTube, that's fantastic. But for me, my opinion, and for the way I operate, I do not listen to 95% of what's on FinTwit. The way I look at it is kind of like the way I described it is this, kind of like having a beer. I mean, there's a lot of people on FinTwit. I mean, friends with a lot of them. I've met a lot of people on FinTwit at conferences. They're probably listening. But I look at it this way. There's a lot of great people on FinTwit, but are these people you want to sit down and have a beer with, or do you want to get financial advice from? There's a big difference. You know, maybe both. There's a few, but do you want to sit down with some of these people and have a beer, or do you want to get financial advice? Let alone pay for advice. I mean, that's the other thing. So the way I have a quote that says, and I tweeted this: "There's no right way to invest. We can all agree on that, but I'm sure there are lots of wrong ways."
Yeah, I've seen that tweet.
And I think there's many wrong ways to invest on FinTwit. And when I say FinTwit, I also include financial YouTube, because they're kind of like connected. So that's my thoughts on that. And I think also, to extend on this, there's too much overthinking on FinTwit. This is also extremely important. So there's a lot of, like, I would call bad advice, but there's also a lot of overthinking. So there's people that are very smart. I mean, but I find you can get wrapped up in this, like, overthinking. So, but you don't want to underthink either. So there has to be like a medium. You don't want to do too much. I talk about this in my book. You don't want to overthink, but you don't want to underthink. So, you look out on FinTwit or on MSNBC, and you see highly educated Ivy League people from the top schools just put out some really bad stuff. I mean, I'm not going to mention their names, but one of them's a woman and one's a guy that works at a show at nights from the stock exchange. So, and paying money to a stock club won't guarantee you investing success. I don't do a stock club. I don't pay in any. I'm not, going to do one. At least I don't know if right now, but so paying money to a stock club isn't going to guarantee you investing success. And I'm going to summarize this focus section as: there is a cost to getting distracted here, because I just think a lot of FinTwit and financial YouTube and mostly Twitter, gets you distracted. And what it does is it takes up your time. That's one thing. So I find myself watching less and less financial YouTube. Recently, last 6 months, I just cut down. I only watch a few YouTube channels. I used to watch a lot of them, but I just cut that down. So you can lose your time, which is very valuable to people. And guess what? Potentially your money by getting distracted by all this, because imagine you're losing money in stocks this year, and also on top of that, paying somebody a lot of money a month or yearly to be in a stock club. And these stock clubs are all over FinTwit. So imagine that. It's not a really good feeling. So I'll send it back to you. What are your thoughts, sir?
Yeah, I've got two points there. I think your 95% to 5% could be applied to all of social media. And I'm just going to leave that at that.
Absolutely.
And then back to your point about focus. You brought up Tom Brady, and I immediately thought of, Tiger Woods, 10, 15, I got 20 years. 20 years ago now, when Tiger Woods was at the top of his game. And you could literally just see the focus in his eyes. And so, focus with the pro athletes, and focusing on, like you said, whatever you're doing obviously it's important. So.
Yeah, I told both my kids that. I've actually posted pictures of my younger son playing basketball. As you can see, I just tell them, I just had a conversation with my son. My son plays pretty high level college sports, college football, but I basically tell him I'm having lunch with my son after this. I'm going to tell you, I always remind him, just focus. It's easy to get distracted in anything you do out there. So that's that section. The next, number 5 out of 7, is cars. You like how I use these easy words like boats and cars? That's good, right?
Yeah, that's great.
People can relate to this. So I talk about this in my book. I actually have a really good quote. Cars, to me, investing to me, and it really is a lot like cars. And I'm going to explain this very simply. It's a lot like driving a car. It requires focus. If you're driving your car, go get in your car today and try looking down or looking behind you and driving, and see how far you get. Not very far. So I talk about in my book. I have a quote that, why do you think your windshield is so big in your car and the rear view mirror is so small? So I think about this, all the time when I'm in my car. Or in life, it just resets me. So, and a lot of driving too is also like investing in another way. I'll tell you that. Patience. So sitting in traffic requires a lot of patience, just like investing. So I'm sure after watching this video, everyone's going to get in their car like I do. I think about that every time I'm driving my car. I've had people tell me that read my book, like, Dave, every time I actually joke with people. I joke with people in my family, like people that read my book. I tell them to use window cleaner on their windshield to keep it clear so they can see out and stuff. So So just looking forward, not looking in your rear view mirror. There's a reason your car was designed why the windshield is 99% of your car and the rear view mirror is very small. And it all gets back to focus, just like investing, just like driving a car, or just like cooking. You'll cook dinner tonight. You have to focus. So what are your thoughts on that or comments?
So I've always had this great saying. I'm not sure where the saying came from, but for every mile of road, there's 2 miles of ditch, meaning that there's a ditch on both sides of the road, right? So again, going back to the maintaining focus, you've got to know what you're doing. I love that too. Pointing out the windshield being big, the rear view mirror being small, because in life we can only go forward, and you can't really worry too much about what's behind you.
Right. You don't want to spend too much of your time on what happened in the back of you. Yeah, definitely. I like your quote too. That's a good one. I should have put that in my book. Too bad I didn't know you. So next is number 6. This is one of my favorites. So number 6 out of 7 summarized investing things here. Let's talk about, this is fun, the Carl Icahn Twitter investment. And I don't know if people know who Carl Icahn is. He's might be older for most people. He's about 85 years old, but he still invests full time. He's worth about $20 billion, which is about $20 billion more than you or me or anyone watching this.
Right.
No, he knows what he's talking about in investing. So they're going to teach college courses on what he did and what I'm about to talk about, like literally for years. I actually think this investment that it just happened a couple months ago is one of the top 5 ever, period. So Uncle Carl, as I call him, he made $250 million. You can go look this up. And it's kind of like flying under the radar. People mentioned this a few months ago, and I'm like, nobody talks about it anymore. It's like, wait a second. This is like, he made $250 million. That's with an M in just the last few months on the Twitter, just buying Twitter stock. So my point of all this is that, so he was betting when that Elon Musk would have had to, when they went to court, they would have had to pay $54. And the beauty of this whole investment is this is something that you or I could do. So if I came to you, Dave, in August or September this year, and I told you, you know what, I have a low risk way that you can make 50% on an investment on all your money this year buying Twitter stock. And if you just buy it and hold it for a few months, it'll go at 50%. Well, this is what Carl Icahn did. But instead, buying a few hundred shares like you or I would do, he bought several million shares. So he was buying Twitter, and this just happened a few months. He did all this in the span of 8 weeks. He was buying Twitter stock at $35. He was buying millions of shares. He held it up with this investment team. This is the beauty of this. This is why investing sometimes can be very easy and not to overthink. To make 50% in this investment, so you or I can make, we don't have millions to invest like he did, but 50% return is a 50% return. I don't care if you invest 1,000 or like he did $100 million. You don't need, he or you or I wouldn't have needed to know a single thing. You don't even need to look at a stock chart of Twitter. You don't even need to waste your time looking at Twitter, analyze it. Nothing. You could just get someone off the street and knows nothing about investing that could have made 50% of their money, because the investment just came down to one thing. You probably would have better just calling a lawyer up, because all it had to do was whether Elon Musk would want to fight or would lose the court battle of having to buy Twitter for $54. Period. End of story. That's it. And Carl Icahn said in an interview recently, that's all he sat around with his lawyers, and they knew that he would have to pay. And he just started loading up on millions and millions of shares. And then when it got bought out, he just, probably popped a bottle of champagne and got bought out and collected he made $250 million. This just happened it just happened like a couple months ago in the span of a few months. So that's my thoughts. That's my on that. Any thoughts on that, or other than why?
Yeah, that's interesting. That's very interesting. I had not heard that story, and like you said, that's a big story. But generally, when people think of like the old investor, the mind automatically goes to Warren Buffett, Charlie Munger. And so I don't think I've ever even heard of Carl Icahn, and I don't know why, because you'd think I would, right? But again, it all just goes back to Warren Buffett so many times. And I would have thought that would have been a much bigger news story, or at least mentioned a lot more in the dividend Twitter community.
Yeah, well, it will be probably after this podcast drops. But
Yeah.
no, it has. But people just, I guess, because he's older, like people just like. And now some big YouTubers have actually they posted a video. That's where I got some of this from. But you can just Google it. His last name is Icahn. But okay, so that's that one, which is really interesting. I guess everybody here is upset they didn't buy Twitter stock in September.
Yeah.
Yeah, sorry to make everybody upset. I did on Twitter earlier. I sold though, so stupid me, I guess. So the last thing here is we're going to talk about risk. That always should come into any investing discussion or stocks. So it is a myth that higher risk always equals higher reward. Why? Well, first of all, I wrote half my book on this. Secondly, I doubled my money, as I outlined in my book, on many low beta stocks, as I call them, or my bank. I also own MetLife, which is one of my best investments ever. Hershey Foods. I could go on and on. So higher risk doesn't always equal higher reward. Just ask, Kathy Wood that. So I wrote this about in my book. I'm big on beta, BETA beta, or as we call volatility. And some people will get into the semantics of it and they'll tell you, well, beta is not risk. Well, I think semantically you can kind of say it is risk, at least mostly. So I have a chapter in my book on beta or risk, and discussing this. But as you know, investing in dividend stocks, Dave, that if I gave someone a choice, if I walked up to someone that wanted to invest, I gave them a choice. Everybody would say they would want to make a lot of money with low risk. I mean, just think about that for a second. Everybody wants to make a lot of money, but I'd want to make it. My first choice would be make a lot of money with low risk, and that's what these low beta stocks that you and I invest in mostly, like even yourself, these dividend paying stocks. Like Hershey Foods has the beta or the volatility of the S&P 500 is 1.0, as we know. So everything's measured against that. So a stock that has a beta, like Coinbase stock, probably has a beta like triple that or 3. It's very risky. However, Hershey Foods, that I wrote a chapter in my book on and studied and invested in, their beta is like 0.35. So it's like way less than even the S&P. However, as I studied, another great chapter in my book is the Hershey Foods chapter. I studied it versus the return of the S&P over the last 15 years, and not by much, but Hershey Foods beats the S&P. So you have all these people out there. I mean, people wrote books on, just buy an index fund, just buy the S&P. Well, one in my book, I actually proved out that, and many have agreed with this, and Hershey Foods actually over the last 15 years with less risk. Again, the beta of the S&P is 1. Hershey is 0.35. Beat the S&P. So, given everyone, if I had the choice, I want to make money on stocks that have low risk. I mean, everybody wants that. They want low risk, high reward. So, I'm actually giving a speech on this in an hour-long speech on in Chicago or I'm having an investor conference next year. That is titled "How to 2x in Stocks with Low Beta." How to 2 times your money in stocks, and I'm going to describe, in detail, way more detail I described to you. But I'm going to talk for an hour about, different examples of how I've done this, and how I will continue to do this. So that is all. Do you have anything before we go? Maybe put it up.
Yeah. So I'll pull up that screen here in a second. I just wanted to respond to your risk thoughts, and obviously. Yeah, there's always the risk, even the lower risk dividend stocks, there's the risk of the dividend being cut or even slashed completely, which I've recently been through on just one of my positions. So it doesn't hurt too much, but it's still, you're like, oh, right. Like, oh, I don't really enjoy dividend cuts. So yeah, the risk is always there. And then like you mentioned, your conference, which, if I'm not mistaken, is it in Chicago? Is that what you just said?
Yeah.
So, and I think, is that up on the screen? There's
absolutely. I'm going to talk about this just for a minute, and then I'm done. Yeah. So what I want to do, Dave, is I want to talk about these investor conferences. By the way, I don't make any money on this. These are just for learning and just kind of like reuniting with some of your friends here on FinTwit. I'm actually a veteran of these conferences. This is the first one I'm running myself, but over the last 2 years, I've been to Las Vegas a few months ago, and also last year, Orlando, Florida, at some large FinTwit investor conferences just like this. Now, these were very big and very, I mean, Mark Minervini was there. I met, him virtually. I met all these people that are watching. I've met hundreds of people of my followers at these conferences. So I want to start doing this going forward once a year. I'm just going to gather. I mean, this conference, we've got other authors besides me. We've got CEOs of companies. We've got a woman that runs her own investment fund speaking. So I want to start doing these because I think that a lot of people now with COVID and working from home, a lot of people, you can only get so many. A lot of people are just sitting home in their pajamas, for lack of a better word, working from home during the weeks, and I don't think you can get, you're not going to find, the best and hot trends, sitting at home in your pajamas all day. So I think it's good to get out and physically go to these places. I can tell you, I'm going to give you one example. This is mind blowing. So about a year and a half ago, I went to one of these FinTwit investor conferences just like this. So I'm sitting at lunchtime. This is a year and a half ago in Orlando, Florida, at a very nice hotel. There was a break. So I was sitting at one of the tables at lunch with maybe like 4 or 5 people. I'm just sitting there eating, listening to people talking. These were all people that invested in oil at the time, oil and gas stocks. So they start talking to me, and I'm sitting there eating about their investments in natural gas and oil stocks. And, I left the table thinking, these are the dumbest people I've ever heard. It's the dumbest thing. This is a year and a half ago. This is oil and gas are nothing. And I thought to myself, who would invest in oil and gas? That's just so dumb. Well, then I was proven stupid because, then Ukraine happened, and so I haven't met these people, but I'm sure they made a ton of money because they invested for years and just waiting, and they're probably all laughing at me now. So you can learn so much. Is my point is by going out and meeting people. So that's why you just go in this conference. The also great thing is this conference is on Cinco de Mayo weekend. I got this hotel rate at $190. It's literally in that picture, a few steps from. It's like a luxury hotel, a few steps from Lake Michigan. There's also a Cubs game that weekend. So, I mean, I don't think I need to do too much to sell this. I mean, I've already got most of it booked out, but you can go online, just go on here, click. You can click on Eventbrite, register directly with the hotel for your hotel room. And you're close to Chicago. How far you can drive down Chicago, Dave? When do you meet us there?
It's actually a longer drive to Chicago than to New York City.
Oh, wow. So yeah, hopefully, maybe I'll see you there, or I'll see you on Wall Street at 5:00 this Friday. But
yeah. So just
any other questions for me, or you want to talk about anything else? Or
I was just going to shout out this Twitter handle is @divtwitconf. Am I reading that correctly?
Yeah. Yep.
Okay. Cool. Yeah, that's great. Great information. Thank you so much for coming on the Passive Income Podcast. Really appreciate your time.
Thank you.
And for those of you watching and listening, please subscribe.
Thank you, Dave. Thanks for having me.